everybody, and welcome to this week's Forex Focus. I hope you've all had a good week in the markets and you're ready and raring to go for the week ahead. In this week's Forex Focus, we're going to take a look at the Canadian dollar because that's the currency there that's moving, that's got the most momentum behind it. And why shouldn't it? On Wednesday, obviously the Bank of Canada came out and disappointed the markets by not cutting interest rates. And then throughout the last part of this week, we've also seen that oil has taken a little bit of a bounce as well. So we're not saying that there's any sort of long-term game changers there, but there's certainly some nice momentum that we can take advantage of in the week or weeks ahead in the Canadian dollar. So without further ado, let's jump over to the charts and take a look at what's setting up technically. So the first thing that we need to take a look at is obviously the oil chart. The oil chart here, as you can see, has really taken a little bit of a bounce last week. So going for the last 2 days of this week just gone, the oil price has really bounced up here. It's broken structure on the hour chart. So from going from a low down towards 27.55, it then broke up above structure at $30.13, and now it's currently up at 32.20. So we've had quite a big bounce here, but obviously you need to take a look at the downtrend there. We are in a major downtrend. There hasn't been a great deal out there to change the long-term trend of oil anyway, but certainly as you can see, in the short term, there is a little bit of momentum there. Now, there were some other things that came out this week. I read an article that the head of Aramco basically came out and said they can certainly see oil prices going lower in the short term, but as kind of seeing it come up towards the $40-50 a barrel by the end of the year. So whether that happens, obviously time will tell and we will see, but certainly in the interim, for what we do here on the Forex Focus, we're looking to take advantage of the momentum moves as they occur, and we are going to be getting momentum moves in some of the in the currencies that involve the Canadian dollar. So just showed you this here, the oil chart, just to show you what we're trading off the back of, because I did a webinar on it this week for FX Street, and what you'll notice is that there are quite a few commodity currencies out there that will track the commodity prices. So the Canadian dollar, for example, with oil, you've got the Australian dollar who tracks iron ore and copper, Norwegian krone obviously with oil. So it is a nice thing to pay attention to these commodities, because obviously that can give you a little bit of a clue as to where the currencies are going. So you won't be surprised to see that all of the currencies that we're looking at this week involve the Canadian dollar or in one way or another. The first one is the AUDCAD. The AUDCAD, as you can see, has broken through structure on the 4-hour chart there. Only minor structure, but it's coming down to a major level over here at 98.16. Now, in terms of this particular trade here, I'm not really looking for a pullback here to then trade it down to the 98.14 level. I'd much prefer to see the market come down to this level and then give us a bounce. So if we can see the market get down to around 98.15 and we start to see the oil prices start to drop again, then we'll be looking to take this one long. So this one, I'm not looking for a momentum move for the downside. Rather, I'm looking for a bounce off of the support level here when it gets down to here. Because as I said, at the moment, I don't see any major issues or major changes in the long-term trends. And for that reason, when we're trading that close to support, it doesn't really make too much sense to be looking to get involved in it. Then we'll be looking at the CAD franc. Now, the CAD franc also is coming up to a resistance level over here, and it's a previous level of support, then becomes resistance. However, this pair here has a lot more momentum behind it. So I'd quite like for the CAD franc here, quite like to see that pull back a little bit towards the 100 moving average, and then give us an opportunity to go long up towards the 72.49 level. Whether we get up there before we get the pullback or not, obviously remains to be seen, but that's certainly something I'm going to look to take advantage of in the week ahead. And once it gets up to this level, then similarly to the AUDCAD, we could be looking for a bounce from that level. And if you take a look there on the 4-hour chart, it is quite a big resistance level. So if the market's going to have another opportunity at taking a short to the downside, I wouldn't see a better place than to do it at this level here. And I can't really see that the market's just going to smash through this level without paying any attention to it whatsoever. So even if you get some short-term opportunity short-term opportunities at these levels, then it could be a good one to take on a lower time frame. Then we'll take a look at the CAD yen. The CAD yen has a lot further to go than the previous two pairs that we looked at. So this one here is certainly going to be a great candidate there to buy in the coming days, in the coming weeks. If we can get a bit of a pullback here towards a sort of the 1 hour 100 moving average, so back towards, let's say, the resistance level around here at 81.83, sort of around that level, and then look for an opportunity to buy. We'll be looking to buy of our targets up here at the 87 level. Obviously, what it does when it gets to that level, we'll have to monitor it closer to the time. But at the moment, for the CAD yen, that's definitely something I'm looking at for the week ahead, is basically to buy this particular pair here. EURCAD, as you can see, it's dropped quite significantly. If you take a look here on the daily chart, you can see these are major candles here. So you've got obviously the fact that we've got sort of like a very bearish candlestick formation at the top here. You see that one moment in time this candle was, and let me zoom in there for you, this candle was quite bullish. It had just broken up above these highs, and then obviously the market sold back down below, obviously not helped by the ECB meeting this week, but that in conjunction with oil prices, in conjunction with what the Bank of Canada did this week, we are certainly looking at this as being a very bearish sign here for the EURCAD. And we're not saying that there's going to be a huge change in trend, as I keep mentioning to you, but I can certainly see that on any sort of a pullback here in the EURCAD, we're going to find that the market pushes it low, and we're going to get an attempt at the lows here at 151.62. So any pullback here in the EURCAD, I'm going to be all over that, and I'm going to be looking to short that. Then coming to the final pair, so we've got the pound CAD, and then obviously the dollar CAD. The pound CAD is very negative because it's broken through structure here, as you can see on the daily chart. And what we've got here, which we don't so much have on the other pairs, is we've got a very clear trend reversal pattern, which is the fact that the market's come up to this level. Okay, so it's a previous high over there. The market came up to this high, failed to get any higher. It then sold off from it, created a low, which is obviously reacting to this area of resistance here. So this area of resistance then becomes support. The market then trades on off up. It doesn't get higher than this previous high here, and also obviously not higher than this previous high here, which is very negative. So now the market's had not one, not two, but three opportunities and three goes ultimately at getting above that level there, and it hasn't managed it. And then it's broken back down, and it's broken below these lows here, which is a trend reversal pattern, technically speaking. So from that perspective, this one looks very bearish. And I really won't be surprised if this one ends up hitting the lows here at 2.000 without even giving us a pullback. Having said that, I would like to see a pullback of some sort. So if the market can pull back a little bit and perhaps respect the previous level of, let's put that in there, that previous level of support and allow it to become resistance. So if the market can pull back to that level, I'm definitely going to be looking to sell from that level there. But obviously, we need to wait to take a look to see what the price action says when we get there. And then finally, we've got the dollar CAD. Now, I've said this for a number of weeks now. We're waiting for a pullback here. We don't want to get involved because the markets are trading way up towards these highs. So from a long-term perspective, we're still definitely long this pair. But as you can see here, we've got some very nice momentum to the downside. And really, if we don't stop at these levels here around the 1.3877, I can certainly see the market trading down even to the 1.34 level. And ultimately, that's what I'm going to look to take advantage of next week. As I'm not going to look for an initial, like an immediate recovery of the Canadian dollar, even though that can happen. And if that happens, then obviously it wipes out all of the trade ideas that we've looked at here. But I don't see that that's going to take place next week. The technical picture is saying that it's going to trade to the downside. If oil prices can just hold for a little bit there, then we can certainly see the Canadian dollar recover just a little bit, and we'll take advantage of that by selling down towards this level down here. And let me just zoom in there. So selling down towards this level down here at 1.34. On any sort of like momentum pullback there, we'll be looking to sell. But once we get down there, once we get within this region, we're then going to be very, very cautious because ultimately this is a big level of resistance there. As I said, fundamentally, we don't think much has changed. If we draw in a trend line there, we will see, just going along this level here, that we've got a number of reasons for the market to turn around. So we're going to look to trade this market down towards this level here, but we're going to keep an eye on oil prices, obviously, because if oil prices seriously start to drop, then that can basically wipe out any opportunities we have in these currencies that we're looking at here. So that wraps it up for this week's Forex Focus. I hope you've enjoyed that. You've seen some nice opportunities there. As always, as we say every week, this is for educational purposes only. So we're not telling you to go and take any of those trades. We're not authorized or regulated to give that sort of advice. All we're doing is giving our own analysis. We're just showing you what we're looking at doing with our own accounts for the week ahead. Aside from obviously the technical picture that we looked at there, we've got quite a full data cupboard this week. So we've got a number of different central bank meetings this week. We've got the CB Consumer Confidence coming out, the revision to the University of Michigan sentiment surveys coming out as well. So we've got quite a stacked data cupboard there as well. So we've certainly got some catalysts for some nice momentum moves. So obviously stay tuned onto the FX markets. Don't take your eyes off it this week, because we certainly could have some great moves there. If you enjoyed this, please feel free to give it the thumbs up below it, share the video, all of that kind of good stuff. I hope you enjoyed this week's Forex Focus, and until next week, good trading and take care.